when it comes to palm of consolidated. I know we are between the lunch and you, so we will keep it very tight. We have a esteemed panel here, and we will keep it very crisp as well, because almost everything has been talked about. We are going to talk about fundamentals and price projections going forward from here. Mr. Bajoria, let's start with you then. And, on channel, I keep talking to Mr. Bajoria about price views, and it's very crisp as he talks to us about that. Palm prices, what is your sense? And also, how are you looking at the rest of the edible oil commodities for the rest of 2025-26 as a season per se?
Thank you, Manisha ji. It's always great to have Manisha ji as the moderator, because then we can expect very in-depth analysis in the panel discussion. And we have a very eminent panel here today. See, vegetable oil is a very interesting subject. And everybody knows that it is about $35 billion trade in industry in India. Imports are $15 billion and domestic production is about $17 billion. So it's a great industry to be in. And we have a lot of challenges at the same time because domestic production is not increasing despite best of the efforts. We are stagnant in soybean to 10 million tons to 11 million tons. Rapeseed, we went up to 12 million tons 2 years back, but we are again back to 10 million tons. And peanuts are again the same story. It's only the oil palm which is now taken some more push in the market, and some few companies are doing very serious effort with the thrust of the oil palm mission, or 11,000 crore mission. So in northeast and the southern states. So I believe crude palm oil locally produced is about 3.5 to 4 lakh tons, and which can go up to 10 lakh tons in by 2029, 30, and maybe 20 lakh tons by 2035. So that is the way the major oil availability looks like. Everywhere else, it is a battle because MSP is not being met many times, especially in soybeans, and farmers are not incentivized to produce more. So that's a catch-22 situation we have come in. It's the situation which has come like it's a rocket from outside which has come in forms of ethanol from corn, and what DDGS we get as a byproduct is competing very heavily with oil mills, and that is creating the imbalance in the whole system. Mr. Pathak is already here, the Secretary General of the SOPA, very vociferous person for seeing that industry does good, but these are the compulsions and we all have to find the solutions to it. So I believe anyway, domestic production, that's what we need. If we are not able to grow much, increase the domestic production, and we are going to be stagnant at 10 million tons, then we need to import 16.5 million tons. But every year incremental demand earlier used to be 1 million tons per annum. But now, recently what we are seeing is in sugar and edible oil, demand is slightly stagnating. Maybe because of the health consciousness or Prime Minister's statement towards it, or maybe because of the high prices, I don't know. But this 3% growth in the demand, I think is going to be muted, and maximum, I think we'll have 1%, 1.5% growth in demand. And that additional demand, whatever we have in this country of 146 crore people, we'll have to either domestically increase production or import more. So I believe we are going to be between 10 million ton to 12 million ton in next 5 years in production, domestic production. And import, we are going to be somewhere between 16 million to 18 million next 5 years. Thank you.
So, the prices are going to be supportive, and as Mr. Bajoria made a very strong point that from 3% demand per annum, we are now looking at 1 to 1.5% in sense of demand. So that perhaps changes things, but clearly the population increase and the fact that we will continue to import more does make even more dependent in the international markets there. Mr. Vidibhushan, to you then, what are the fundamentals that you will watch out for? Indian demand per se, and what are the global cues that you will foresee from here?
Hello everyone. First thing, I think the last session has been very enriching with all the factors already been discussed, and taking some cues from that also. We all know, first of all, we used to talk about that these are the edible oil, and now we have to correct ourselves and call about vegetable oil, because we know that the edible part of it has become less relevant and biodiesel part of it has become more relevant, or industrial part. Everyone has mentioned in the previous session that the increase, if you look at it, the food increase has been less, but it is the biodiesel consumption, edible oil consumption and biodiesel use which is taking the prices higher. Fortunately or unfortunately, we are in India, we are the only spot in the world where the food consumption is going higher, and we are entirely dependent on the food consumption, and our usage of edible oil is going primarily on the food. The population David has shown, and all those things are requirements, despite of we want to reduce our edible oil consumption for health consciousness, but we still love our delicacies and all. So fundamental part, if we see internationally, is the biodiesel consumption in the US and Indonesia. But I will put it, if we look at from the market fundamental factors also, I will divide it into two parts. First is up to Diwali and then post Diwali, which is also the quarter 3 and quarter 4. Quarter 3, we are going through a tight situation right now because we have not bought earlier a lot of palm oil because of the palm price premium. But we have corrected that, we have started buying it, and going forward also, whether we like this price or not, the supply of palm oil will be there for India till Diwali. And that is not because we want to buy at less prices, but because if the levies keep on increasing, I'm sure our friends in Indonesia and Malaysia keep on pushing more and more palm oil into India. So that will keep us well supplied, even if at a higher prices. The second thing is also we have bought a lot of soya oil. MJJ was very competitive, so we have bought a lot of soya oil which is going to arrive. July per se, if we look at soya and sun both. So July, if we look at the arrivals, our arrivals will be somewhere closer to 1.7, 1.75 million tons. So this will also take it, and we are now in a comfortable stock zone scenario, which we were not in the month of April and May. Going forward, we are yet to cover a lot, but up to Diwali there will not be any domestic crop barring mustard, and mustard is currently trading at a very high prices. It has gone from again the $550 spread with soya oil. It is also pushing all the markets and keeping all the markets supportive. So locally, up to Diwali, we have some tightness. We have to depend a lot on palm. Post Diwali, we will have our domestic supply coming in. Last year, we have seen that cotton and rice has done a very good job keeping the markets well supplied, even if we are buying less palm oil. So, and I'm sure this year also, if the prices will continue to do that, cotton and rice bran oil, and even soybean oil. So domestic oil will be available, and then we will have the supplies from outside the world also, from OND side. So I see, although the undertone should remain bullish, but we should get some chance to buy earlier also.
Oh, okay. So that's the second expert on our panel telling us that the prices will be bullish from here on. I think that perhaps is what we'll get by the end of this conversation. But to begin with, I am taking everybody's initial reactions, initial analysis within the sector, and then of course we'll go into prices there. Mr. Pathak, soy, that in the international markets we seem to be looking at a glut. In the Indian markets we're looking at higher MSPs, prices trading below MSPs rather. How are you looking at the overall sector impacting soybean from here on?
Well, I will not talk about the price, of course, as I declared earlier. But I see very kind of bearish trends in soybean, particularly across. We are seeing the same numbers in sowing as we saw last year. Productivity is likely to be better as the weather is now. Of course, anything can happen in the next 60 days. The meal demand is still subdued and it will continue to be so. The DDGS continues to play havoc. Given that situation, the crushing will be definitely not as much as we expected or we would want to. So if I were to say, let's say 100 lakh tons of crushing, 40% in the next 3 months, first 3 months. That brings us to about 9,000 tons of soybean oil. Globally, of course, the soybean oil has been slightly rising for some reason. Soybean meal prices have been going down globally. So we have a double whammy. The soybean meal export market is sort of totally stopped now. We had some scope in Europe, but the UDR is a big sword hanging over us, and we are trying to solve it. So given that situation, the meal demand locally lower, the meal demand for export lower, the crushing lower. Overall, I don't see any support as far as the MSP is concerned, 5348. I have no hope in hell to be able to give that price to the farmers. I don't know what the government will do. They bought 20 lakh tons last year. If they really want to support the farmers, or if they want to continue growing soybean in India and not let the farmer run away, they will have to buy 56 lakh tons, which is a huge amount, of maybe 40,000 crores. And the loss will be again 6,000-7,000 crores. So I think the situation is such that one doesn't find a way out of it. But MSP is completely impossible this year. That's what I can say.
But year after year, we've seen farmers continue to sow soybean. I mean, even now, if the numbers don't look so bad, how do you see and why do you think Indian farmers are doing that?
Why they're doing that? I think that is a misnomer that the farmer will not grow soybean. I think there is a perhaps kind of a lobby working silently, certainly in a subtle way, to keep suggesting that the soybean should not be grown in India. Why do we grow it? Why do we waste 12 million hectares of area in soybean? It's a foreign crop. We can import all of it from America and USA. It is not going to happen, not in our lives at least. The farmer loves soybean. Soybean has several advantages. In some areas, you cannot grow anything. Like for Malwa, which has got 30 lakh hectares of area, you cannot grow corn or anything else. It has to be soybean or nothing. The area used to be fallow 30, 40 years back. Now it is soybean and soybean. Secondly, at least this year, with the government buying, the farmer has got a boost. That look, there is somebody who will buy my crop at this thing. So this was a big indicator that the area has not gone down. I was expecting area will go down 5-10%, but that's not happened. This other thing is soybean is a very versatile crop. It doesn't destroy at all. In an area which goes bad with weather, excess rain or lower rain, the corn will be completely destroyed. Nothing will grow. Soybean you will still have 30-40%. So that's another thing. In Maharashtra, the farmer is learning new ways of, better ways of growing soybean. So the productivity there is increasing. Gujarat, the productivity is the highest right now. But the Pradesh is also sort of tagging behind and working on it. But given the situation that everybody wants soybean, and then you should not forget, we need soybean meal, at least 8 million tons in India, which is growing. If we do not grow soybean, we have to import that also. That's a big cost. So we import soybean, we import oil, 150,000 lakh crores, and we also then import meal, 50-60,000 crores. That's not going to happen. So we'll continue to grow soybean.
All right. I will of course come back to everybody with prices. Even if you don't want to give a price range, you can tell me whether you're bullish or bearish, but I'll come in the second round for that. Mayur, as head of trading Imami, how do you look at edible oil sector evolving from here in the next season?
Okay, a very good afternoon to everyone, and thanks to IVPA for allowing me to be a part of this esteemed panel. Well, I'll just try to keep it very crisp. I want to keep it crisp what will happen in the next 3 months or 2.5 months before we meet again for the Globe Oil. I think because we are meeting quite often nowadays in terms of conferences. So in terms of focus, I think India has been rewarded for its patience. As we have seen, they have waited in April, May, and we have seen inventory swell at origin. And at the same time, if we keep our discipline in terms of buying, I think we'll get continued rewarded. India is a nation where we are paying people, when we are importing, paying fast. We have a clean operations, and that is enabling the world to sell more to us at a faster pace. And we should respect that because a lot of the nations, they are struggling with dollars. Their country situation is not great in the nearby region in Asia. While the palm, when it goes to Europe, they are neglecting it. And we are the ones who are importing close to 9 million tons and almost 20% of the global palm flow. And for soybean oil, of the total export, which is being done close to 14 to 15 million tons, India is importing close to 25%. And if we are such a commanding buyer, I think we need to get that equal respect from our suppliers in terms of supply and consistency. We have seen they are doing policies to more export, reducing the exports and doing more domestic consumption by way of biodiesel. That is disturbing the food security of our nation. And that's a more serious concern, Manisha. I think what is going to happen, we were close to 60% import and 40% domestic ratio just a decade back. That has almost gone to close to 70-30. And the way our domestic production is going, it's a serious energy and fats consumption for domestic consumer. And for that, I think at the moment I can see, speaking to different people, we don't have a clear solution. We're still struggling with the import basis only. So the way I see, for the short term, we keep discipline. The inventories are there, at least for the next 1 quarter, before the inventories come down at origin due to seasonal reasons. And in Argentina, South America, the crush will also come down. At the same time, what is happening? China has become a big crusher now. It has crossed 100 million metric tons of crush. That is allowing it to export not just oil, but also meal also. It is taking share of US markets. So what US crushing industry used to do, they used to crush and sell the meal into Southeast Asia. That is being done loud from China nowadays. So that change of trade flows, we just need to be agile. We can buy from each and every nation where the oil is available and suit to our needs and commands to our requirements on a domestic basis. So I think we are in the right place, but we need to also employ policies to be more oil-oriented crops that should help our country in the coming years. Thank you.
Well said. Prashant, I'll take a leaf out of what Mayur said and give it to you really, because he says that 70% of what we consume now in edible oil is what we import. And it is because of the policies of other countries that our food security is in a jiffy right now. How do you read that?
If you look at all the global supplies as well, first thing is it's very clear now, biofuels continue to dominate, which means global exportable supplies is going down. That is where we need to be very clear, then too soon to reaction on the biofuel things, even like we have seen palm oil going up too soon, too fast. Market discounting, it's more like B50, which means again, everyone is talking about reducing the export surpluses from the global countries. That is what. So how do we handle in India is the question. One is is the domestic production going up? And then is a consistent buyer. India has been a very consistent buyer in the last 12 to 18 months. At a point of time, our pipeline stocks, where we have gone down to the pipeline stocks. In the last 7 months, as we have seen, our pipeline stocks building now as well. We are buying at a very, very strategically. India has been a great buyer in terms of markets. Plus the domestic production on the beans and the local crush and the availability of local oils. We have seen a great track on the rapeseed oil as well. That I feel would continue on the rapeseed process and the government's mission and palm and everything, though it's very slower pace. That is where the focus will continue to happen. And meanwhile, the global factors continue to dominate. Biofuel policy will continue to dominate. Another fact which we would also like to see is on the sun oil side. On the sun oil side, we have seen this year the production, we're talking about 4 to 5 million tons a year to some other weather disruptions and all. So which overall also is indicating the supplies will continue if things get normalized. Either the SREs exemptions still awaited till October, RBO volume still awaited, B50 long way to go. Climatic changes in Europe, Romania, Bulgaria, etc. yet to materialize, which means we have supplies in the short term look a bit, properly impact, but on the other side, Indian demand will continue to be robust for at least Q3. That's the conclusion is basically short term. We'll definitely have sufficient stocks, a bit of local oils, but in the longer term, definitely it's a industrial oil dominance that's going to go ahead.
Fair point. Shaja, this one is to you then, and let's talk about mustard now, because that really seems to be driving this whole party. How are you looking at the production numbers, the demand as well as a lot of people start moving to that Kachi Gani? The craze really seems to be picking up there. And also, what's your sense on what needs to be done in sense of policies? Now, almost everybody says it all depends upon the government agencies from where and how much do we get in sense of supplies going forward. Your sense?
Good afternoon, everyone, and thank you, Manisha ji, and thanks to IVPA for organizing the wonderful event again. Try to address both of your questions, and let's try to touch base again. Before, just give a brief of what's happening in the world dynamics, vegetable oil dynamics. Recently, the RVO 56, what has been announced in the US, and if that materializes, and that's completely changed the overall picture of edible oil in the world. US will be completely shut off of exporting any of the single crop, but it will still remain the price barometer in the world. That we have to see. No exports out of the US, but still you are everyone watching the US and CMEs for the price direction. So that's a big change. And for that we have to have very good understanding of the local market dynamics, which is still we have so many policies still to be verified. And if you see what is happening, like excess of meal has been reflected in the oil share. Oil share has touched over 51.5%. It was like a high it reached the high of April 22. The highest was oil share went into 74, which is 60%. And if that RVO of 5.6, I think we are going to touch that soon, maybe in the end of the year or maybe next year. So I think we have like you have April 85, you have like oil share was 57.5, 74, 1974 I'm talking about. Oil share was close to 60%. So are we going to there? Yes, I think most probably we are going there, subject to bearing the confirmation of some policy changes. Plus the B40 successful implementation. Talk about B50, which is going to take additional 2.5 million metric ton of oil out of the palm food side. You have a B15, and then another incremental. So worldwide, so there is no competition between the oils. It's a competition with the fuel and food. And that has just a spark. And so out of the 61 million metric ton going into the fuel consumption, which is over 22-23% of the total veg oil, edible oil production. That's incredible, it's huge. And with all the government policies like shaping up, is more and more towards the fuel. So that's the one which we need to watch. And for the India, I would say, train for edible oil has already left the station. It's the last few years, like 2015 onwards, and very difficult for the government to control coming to the policies. Control, they increase the duty, lower the duty, MSP, what else they can do it, right? Focus more on the oil-bearing productions, it's rapeseed groundnut, but it has a limitation. With rapeseed oil, Kachi Gani trading over $550 per metric ton premium, right? So certainly it has intensified the farmers to go rapeseed, and that too is close, maybe 15-20 days early we might see the crop. And as if one thing which we need to really watch is last 11 years, and we have been really blessed with a very good monsoon, right? In the world as well as in India. So when I said the strain has already left the station, which means, what is going to happen is what the government going to do in policy. Are they going to follow the Chinese model, Chinese government model? For that, they have to build the reserves. Coming to the food security, what Mayur has said is like, if you have 70% dependency on the import, you have to have, and I'm linking this with the weather, very good weather. What if in 3 year, 4 year down the line, and we have dependency on very few countries to supply the oils to us? What if there is something mismatch in this? Again, it's a what if. If mismatch in the weather, either in India, which is a 9 million production, or in the South America, only 2 countries, right? And the Malaysia, Indonesia. We have only 4 or 5 countries we are talking about over here. If that happens, I think government can do it. And so we have to, government have to start much earlier now to start thinking of the buffer stock. That would be the right policy, because I think the areas there, dependency monsoon is there. All the things we all know about it. But that's the policy. For long-term policy, we have to go to the Chinese model. There's no other option left. Otherwise, you are ending up either 90% of import, or you have something else, the price rocketing to $2,000, what we have seen, $1,900, $2,000. That is the real possibility which is building up. That is what we have to see. Second is what we have to, mustard, yes. Mustard is falling. We have few months where you will not find any alternate oil, all the domestic oil. The reason for the tightness of whether it's a cotton, rice bran or mustard, initially first 3-4 months of the crop, I think we have consumed all domestic. That has reflected in the drop in the imports. Now the import is catching up. You find nothing in the domestic, right? So we have the next 2.5-3 months, we have peak demand months. There's no other option but to go for the import. So we feel as, like looking at the import, a lot of talk here that, Indian consumption going down and, we're dropping 2%, 3%. I think we feel domestic consumption is not going down. Our consumption is in fact going up 1.5 to 2%. If you look at the import volume, you have to combine with the domestic pipeline. That pipeline has shrunk from 900.9 million metric ton, 900,000 pipeline has shrunk. So what we did, we have consumed the local oil, not only consumed the local oil, but also we have, all the domestic oils, right? Whatever we have port, pipeline, secondary pipeline, primary or secondary pipeline, we all consume. So we are running at least where minimum pipeline. That is what is going to take it. And India going to drive the, like the world markets as usual. And this is demand as to, but again, it is next few months because a lot of US driven policy decisions are pending. We are, I think, going to live in the world of high volatility period. So if I'm not going to one-sided on the one prices, I think it's going to be wild swing. It's all policy-driven wild swing.
I absolutely get that. This one is to you, Mr. Thakur, then, and I'll take it from what he said. Has the train left the station, Mr. Thakur? And he came out with a lot of what-ifs. And, for the longest time, we kept talking about on how our dependency on imports is 55, then we started saying 60. The last couple of days has been anywhere between 65 to 75. He's talked about 90 going forward. This whole Atmanirbharta thing that we've been talking about but not implementing, is that going to change a lot of things going forward for us?
You are talking about Indian context.
Indian context, and of course, since we're importing so much, where are we going to get it? How is the international trade working? We understand it's going to be very, very volatile going forward, depending on policies. But
before coming to the Indian context, let me just summarize. We have had the benefit of a lot of esteemed speakers talking about numbers going forward. Let me just talk about very briefly the 4 or 5 factors which would impact the global situation, and then we will come to India, where we are. Probably starting with supply, demand, then probably I'll talk a little bit about other externals, forex, policy in Indonesia, which is also quite crucial. From what we have seen and what I presume as well, the supply for 25-26 is not going to increase very much. You may have a couple of million tons of increase, but on the demand side, there's a lot of upside, and not on the edible. Edible is a forgotten chapter in history, and somebody, I think, aptly said that we should not talk about this being an edible oil conference. It's a vegetable oil conference, or maybe later on we could call it a biofuel conference. Coming to what we have heard about the US situation, the jury is still out. What is going to happen in terms of the policy? We know between policy and practice there's a big gap. We talked about, and somebody talked about SREs being probably being the guiding factor, about how much the impact of the policy will be. Net, what is important to note is how much edible demand is going to increase, not substitution, overall increase in edible demand due to US things. Now, I don't see, even if everything is put into place, SREs come, probably it will be spread over a couple of years. I still feel that the demand overall will go by a few million tons. If demand goes higher by a few million tons and supply is not keeping pace, that itself is a very bullish scenario. Now, let me talk about, since I come from Southeast Asia, I think it would not be out of place to talk about Indonesia, which will be also a very important country to watch in terms of what's going to happen to the biofuels policy. I think people have talked about B40 and B50. Definitely there has been increase of a couple of million tons, further increase in 2026 is possible. But there is also an element which is quite hidden in the Indonesian system, and that is the export of UCO and POME, which is actually in the guise of UCO and POME, a lot of CPO is also getting blended. That is about 3 million tons. So overall scheme of things, if palm oil production goes higher by 2 million tons, and the 3 million tons of POME, which used to be exported as CPO, is getting back to the system via the biofuels in Indonesia, then the actual S&D in Indonesia may not be that tight. So that could give a respite to consumers like India for the very short term. And to conclude on this general scenario of whether the markets are bullish or bearish, probably I think it is better to divide what's going to happen in the rest of 25 and what is going to happen in 26. If the US policy comes through and all those numbers get fructified, then we are seeing a very bullish 2026. And probably numbers of 5,000 with Nagaraj just said probably could just be the start. It can even be higher. But if we just talk about the next few months, Malaysia and Indonesia are having good production cycles in the next couple of months. The stocks in both these countries are decent. They're not very high, but they're decent. So in the next few months, probably the hype which has been created by the US policy and which is still far ahead, a lot of it is unknown in terms of what is going to happen. Probably there is some respite in the prices possible in the next couple of months, but those respites, I presume, would be buying opportunities for consumers like India. And going into the next year, I think the best idea would be, because if there are carry markets possible because of this supply side coming, India would probably want to buy as much upfront, upload going into the next year as much as India can. Now, I mean, the last bit on India, how does India create self-sufficiency and Atmanirbhar? I think yields, improving yields in India is the only answer. I don't see any other way India can probably get over this crisis of being net importers of edible oils. 60-70% of oil is still imported into India, and things won't change. And the way I saw, I was really surprised to see the per capita income in India. I thought it was 15, 16, but we are talking about 20. So that is very difficult to satisfy in the coming years. And I always believe that at some stage, the food versus fuel debate will restart. Edible oil prices will go to such high levels that governments across the world will be forced to consider going back and shifting demand back to edible oil.
I think that's exactly where the PM statement comes into focus, doesn't it? Okay, driven by discipline and time management, we are 3 to 4 minutes into this panel more now. So while we have spoken in detail about all of your knowledge and experience on where we could be going from here, but let me come to each one of you quickly and get your sense on prices from here. So if I had to put Mr. Thakur in a bracket from not bullish to very bullish, I'm putting you to very bullish. Because all the factors that you've talked about, you do expect the prices to go much higher from here. What are you most bullish on? And one thing or one vegetable oil, I'm not going to call it edible oil anymore now, vegetable oil that you are seemingly concerned about.
If you see, if the policy in US, as I said, goes through, and we have, I mean, just imagine a seed oil, which is only 19% is oil, the rest is meal, being used for biofuels, and major biofuels in a producing country like US. There can't be anything more, I probably stupid,
So very bullish. So you think
very bullish for soya oil.
very bullish for soya.
I think at this
Not
point,
bullish, very bullish.
I think we have to divide into 3 months and then next year, 26 onwards.
But you initially in your comments
so-
said that every decline is going to be a buying opportunity. You stay with that.
I do agree with it, but again, as I said, like it's a very policy-driven volatility are in the cards in the pipeline, and if that happens, I think we might see very wild swings. And with this wild swings, consumers should not like. My bias is more fuel going forward. So I think I'll divide it more towards the 3 months where being an Indian company and like 3 months what is consumption going to be depend upon the current market dynamics. I feel it's possible 39.50, 4,000, pretty close to the BMD. I think 50 cents in the Chicago, 51 cents Chicago. I think going to be quite interesting. Can it be low? And next few months we'll come to know about the policies. If the policies are in favor of the fuel, we might touch the 60 cents. And if that is 60 cents, will prompt more up to 4,500 in the BMD. So I think we are expecting is to dips to be own kind of policy as earlier. But again, don't want to jump in and start buying, right? We'll get our chances to own it, but that time we have to review again and take a call.
I'm just taking a sense. Not bearish though.
I would say it's a high frequency range bound trade.
I would say consolidated markets getting back to fundamentals, assessing the climatic situation in Europe, re-evaluating on the chances of 50 later, and actualization of US policy numbers. Short term, yes, a bit of pause, sit back, consolidated range, $50, $100 here and there. Then yes, long term definitely the market is following the trend in the US, like we say, when US catches 4 the world, really just
So bullish, consolidation, and then bullishness.
Hello. Yeah. I mean, I want to keep it quick. Market looks supported next year. This year, I think there is still oil which can be managed with the current pipelines. So for the Indian consumers or the world consumers of whatever you want to consume, and if you continue to remain the spot consumer, the funds or other buyers who can buy forwards, they'll front run you and get their positions active. And the buyers like India or Asian nations nearby, they'll be left with the spot tightness. So we as a buyers, I think we need to also look into policies a bit much of forward buying, considering our whatever research work we have done that will enable us to break any of the sharp rallies. Why will the consumer suffer? Only because of sharp rally when the trader in between makes money and the end consumer pays for it. To break that, there has to be sufficient ownership at different levels within the value chain. And what government can do for that is, I just want to keep it one small point, because we had similar situation in China in 2011 to 2013. Government created a 4 million ton of rape oil reserve. They called it the guerrilla reserve. What they used to do is, any time the oil goes a bit stale, they keep on releasing it to the local, I would say, crushing or availabilities of packing, and used to replace it with the rotation of a couple of vessels to keep it fresh. And that only did when the prices were very low. They don't need to do when the prices are at a high. So India need to think of these policies, and this has to be a bridge solution till the time the local oil seed mission picks up. If you want to do everything Viksit Bharat today, it can't happen. We have a gap of 7 to 8 years when it will start giving results. Till that, we have to manage with this short-term policy. Thank you.
And then bearish or bullish?
I'm supportive next year. Yeah.
Bullish.
Yeah.
We call it bullish. Okay. I had a conversation with Mr. Bajoria long back, and he was like, prices niche jaye ya upar jaye. I am making money, but where are you? Where do you think prices are going?
Manisha, we are all here to make money, so we have to strive our best. But anyway, we have seen some rise in the market in last 3-4 weeks. We have seen the market has rallied it's about $70-80, maybe $100. And there's a slight reaction today. But overall, the bearishness has gone out of mind of everybody now, domestically or internationally. Earlier people were talking about 3600 KLC, index and all that. Those things have gone. Now I believe if you have to take a bottom of index, it is definitely, handbrake is at 4000, but probably it should not fall below 4100. And upside can be 4800, 5000. That could be possible by December or first quarter of 2026. This could be possible. Because see the last year when the talk of B40 started, the fund started taking positions in July, and then slowly they took it up on 10th or 11th of November. It was a peak on index. And then there was some news that B40 may not be implemented and something can go wrong, and there are state and non-state and all these things, and that's why it came down. But anyway, this year also the B50 news started. Funds had already taken a position expecting Indonesian production not coming up, and in B50 news. There will be some ups and downs. There will be opportunities that, as Mr. Ashish has said, there will be opportunities you can buy. There will be some dips. But overall trend is definitely up. And one thing is, you can, like our Prime Minister, Mr. Modi, once he decided that National Health Mission scheme has to be implemented, it got fully implemented. When he decided within 40 days we have to open 28 crore bank accounts, all the bank accounts were opened. Because the Joint Secretary and the PMO every morning used to call chairman of every bank, give me in last 24 hours how many accounts you opened, because I have to report to Prime Minister at 8:30. So you can imagine what the situation of that poor chairman was.
So what you're saying is at these prices, and if they continue to go higher, what the PM has said will be achieved?
No. What I'm trying to tell you, the Indonesian president is also a copy of Mr. Modi. And they are also in Indonesia, they are very strong in what they talk, decide and then implement. That's what we are seeing in B40. B40 in Jan, Feb, everybody was thinking is not achievable. And because they have done that, this is compulsory state lifting and this is optional for the private sector. Still they managed to do it. So I believe now they are talking about B50. If they do not change their statements on B50 or the thinking, then definitely this upper level, what I'm trying to tell you, is going to happen. So as Mayur has said, that we need to take ownership in between. We cannot be totally exposed of all this situation. So I believe this is my perspective.
Absolutely. So more and more bulls, actually everybody on the panel is a bull here. What's your sense? What prices are you looking at?
As I said, divided into two. So next 3 months, it will majorly depend on how India behaves. Because all other factors are already factored in, that's why you are at this kind of price levels. And India, whether we have a festive season and all, demand season is good. How India behaves, it will determine. But next, again, then when we talk about OND, everyone will start preparing for 2026, which is slightly bullish, right? So next 3 months, India will decide. We'll definitely get opportunity to buy, because for next 3 months, everything already discounted. The upside could be limited, but it will be range bound.
You don't see a big run up in prices? Not for the next 3 months?
That would also depend on how India chases it. And at these kind of levels, India might be forced to buy, but not comfortable at. I would put it this way.
Mr. Pathak, I know you gave me a thing earlier itself, a disclaimer that I won't tell you prices, but looking at the way the markets seem to be evolving right now, are you bullish as well?
Two things to watch. Of course, I won't talk about prices. One is crude price. And I do believe, as my friend said, food and fuel, ultimately the food is going to win. There are a lot of sources for fuel, alternative sources, and more are being developed, the technology is there. There is no other source yet developed for food. So, and the second thing we must remember is that the government still has 17.5% of duty, which it can tinker with. And yesterday, I think the food sector gave very clear indications. Guys, careful. I won't let the price go up.
All right. So, well, there still are some armory there that can control prices. But thank you so much, gentlemen, for joining in.
One point I'd like to raise, Manisha, sorry, for price, we need to, for next 30 days, is very crucial because of the weather in the US in August, which is for the development of soybean crop, weather in Russia and Ukraine for the sun crop, and the weather in India, which is might be 30 to 45 days. These are three crucial weather events are going to take place in next 30 to 45 days. So for price direction, I think we have at the moment is hardly any premium in all three. So just watch for those. If something goes wrong at the time of crucial yield building stage, that can take the wild swing. And second very important point to understand is price always follow the money trade. See where the funds are putting the money. So funds from from 40,000 metric ton short and now 45,000 almost long in CME, and plus what is happening in the Dalian funds, in Dalian what the funds are doing. So always watch for the price direction because price always follow money. Where the money is, so do the consumers.
Absolutely. And as is said that weather is the agriculture minister in most countries, so that perhaps continues to hold true. But thank you yet again. Thank you very much for joining in. Thank you for your expert analysis and of course price sense as well.
Ladies and gentlemen, a huge round of applause for this wonderful panel that has kept us informed and engaged right till the very end. I'd like to invite Mr. Sudhakar Desai to felicitate the panel. Mr. Sandeep Bajoria. And ladies and gentlemen, please note, do scan the QR code to download all your photographs from IVPA Global Roundtable 4.0. Mr. Vidya Bhushan. Mr. Mayur Toshniwal. Mr. Prashant Reddy. Mr. Ashish Acharya. Mr. Purnindu Thakur. Mr. D.N. Pathak.